Cardano powerhouse breaking new levels. It is taking off. We know it's a strong project, but now that's really showing in the price action. But today we're going to track back to how we predicted certain things with Cardano on May 17th and then just a few months ago and a few weeks ago to see what's happening now so you can have the skill set to predict the future. So you can see with high probability what's likely to occur. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years now and featured in the best-selling book, High Probability Trading Strategies back in 2008. Been trading currencies, but now focused on cryptocurrency, bringing that knowledge and wisdom to you. So let's dive into Cardano. So very quick, we're gonna do a quick backtrack, right? Because there's a few important elements and I wanna drill these lessons home to you so you can use this. Because like I only normally do around one video a day or release a video a day, and you probably have 10 coins in your portfolio, and then there's 1,000, I think there's how many we got, I think 1,400 subscribers, that's only growing. So I wanna give you the skill set to be able to do what I do. So we looked at Cardano over here. Is this the right chart? Yeah, this is the right chart. It is Cardano. Is this the right chart? Have I got the right chart? Just make sure I've got Cardano. Yeah, it is Cardano. It is Cardano. Yeah, this was on May 17th. I just wanted to jump into a chart and show you what we projected. So I've just backtracked a little bit with the data because then we're going to get to today's data and what we should anticipate happening next. Because most people don't realize how powerful Elliott wave and Fibonacci actually is to really feel and see the psychology of the market, the buying and selling behavior of the masses, which impacts the price. So what we saw down here in this video was we saw this part here. You see these yellow where it says wave 1, wave 2, that's what we're going to focus on. Because what I saw here, if I jump onto the live chart, is I'm gonna do it in big bold text so you can see what I want to show you. I'm going to show you like this. Boom. Let's just do it in, let's keep it amber or orange. 1. Again, it is a micro count, but I'm going to do it nice, big and bold because I want you to really digest this lesson. 2. This is a sub-degree count, meaning it's on a lesser degree. We're focusing on this last part of this wave. Have this 1, 2, 3, 4. Have this wave 5 happening, and then it's a 1, 2, and then it looks like a wave 3. We should anticipate a wave 4. And when we see it, which is unfolding right in front of our eyes, down here, and put a question mark there. We're going to unfold the data slightly. We're going to go right, boom. The data's moved up. So what we do in this case, and this is so important when taking profits, right? Taking profits. If you're able to see what I'm about to show you, man, it allows you to really peg with high probability where's the top of the market going to be before a pullback occurs. So what we're going to do is 2 things. I'm going to draw this for you. This is so important. I'm going to make sure I get it clear. We're going to measure this wave 1 to 3. Yeah, this wave 1, this wave down here, wave 1 to this wave 3. We're going to measure that, right? And we're going to project it forward from wave 4. And we want to take 100% of this, which is here. But we also want to take 62% of this, which is going to be around down here, right? So when I do the next Fibonacci lines, this is exactly what we just measured. We're going to take this wave 1 low, measure this wave 3 high, and project it forward from this low here. And you see, we've got the 100%, which is the top of this arrow, but we also want 62%, which is this here. So now we've got this range for a typical end of a wave 5. So 1, 2, 3, 4, 5. Now we're going to do the exact same thing. But now this time we're going to measure this wave 1 to wave 3 and project it forward from this wave 4 low. So again, we're going to get 100% up here, and then we want another 62%. So now we're doing the same thing on a lesser degree. It's the final wave 1, 2, 3, 4, 5 of this section. So again, pretty much the same thing. Click, click, and it requires one last click. And what we're looking for is a cluster. And now we've got these 2 clusters. We've got this zone here and this zone here. And we want to now narrow that down a bit more, and we'll use something called an external retracement. Again, I've done it already. The Elliott wave and Fibonacci masterclass, I'm going to give it to you for free. We're just doing the final edits. So hopefully that will be ready within the next 7 days. This is an external retracement. bang. And the actual numbers is going to be more this one that we want to be aware of, but we also want to take this one here. So now we've got these two zones, two really clear zones ahead of time. Obviously I'm backtracking, but I'm just showing you got these two zones here. We've got this zone here and we've got this zone here. And what typically happens with Fibonacci price is if one zone is exceeded, if the price goes above one zone, it will tend to typically get to the next zone and then a correction, right? And then literally what happened with the market with Cardano, it just went through this like it wasn't even there, right? It's just like almost ignored it. It was a panic buying. This is like panic buying when it overstretches and gets to this 100% of the projections that we did. We can now get rid of this one, and we can get rid of this one. And we can say, right, there's a higher probability that Cardano's is reaching a high. This is time to take profits. Like it's time to take profits, you know, and it's hard. Some people find it incredibly hard, but what I would personally do is start taking it on a 1 bar low. So a 1 bar low would have been, if I just bring it here, you would have ended up taking profits around here. 1 bar low would have been here, exiting here. We also want to look at momentum. So if I bring up the momentum indicator, I'm going to pull up the 8. It's the 8. There we go. It catches all the waves, but it'll be the next bearish reversal, 1 bar low, you would have exited around here. And then Cardano obviously did a correction, right? So we're now just catching up. And now we did a big correction. Why is this really important? Why am I emphasizing it so much? It's because crypto is brilliant for making money, but most people end up losing money, right? Let's just face the facts. Yeah, most people end up losing money, not because their portfolio is not up at any stage. In fact, most portfolios get to be up significantly, especially during a bull run. But like, when the heck do you take profits? Because how do you know when is the top? When's the high probability top? It's really important to know that we don't know for certain, but we can predict with high probability what's likely. So that's what you just saw at the top. Now we're going to do the reverse, which is saying, okay, we've had this big reaction to that zone, and now the market's moving down. Let's just go back to our line chart to make it cleaner. And the data is unfolding. I just want to go to this low here. Bang. All right, obviously we now know that this was the low. Actually, the low was made down here. But what I want to do, let me just get rid of this. Get rid of this. Get rid of this. Let's just put that to the side for now. And what I'm going to do is say, look, we're anticipating a wave 2 low. How can we project with high probability? Where is the likely low going to be? Where's the likely low going to be? Well, we can actually project that in advance. First of all, we do a retracement. So again, what we're going to focus on is macro picture first. This is macro. Wave 1, wave 2, right? I'm going to do it like this because I need these tops and these highs, right? And the macro is going to requires a retracement. So we take this low to this high. In fact, I'm going to do it from here. This is just a bit cleaner. This low to this high. And the typical correction is a minimum of 50%, always minimum 50%, and a typical maximum of 78.6, and there's an interim of 61.8, which is 62%. So we've got these 3 lines that we want to be aware of. That's the macro picture. And now we want to take the intermediate picture. You go, intermediate, you get what the heck does that mean? Well, typically, corrections occur in 3 waves. We got this first wave down, boom. We got the second wave up, boom. And then we've got this third wave happening, boom. Right, let me just move it to the side because I'm going to need the data. I'm going to move these here just so you can see it, right? Now what we're going to do is we're going to measure this first wave down and project it forward from the top of the second wave to see where's the likely end of this next wave down, A, B, C. It's really common, and around 50 to 60% of the time, these patterns unfold in this manner. So what we're going to do now is we're going to take this high, measure this low, project it forward from this high. The most common is 100%, and the typical minimum relationship is 62%. So now we can do 2 things. One, we can get rid of this. This is saying this is unlikely, right? Unlikely, so we can get rid of that. And then these 2 zones are highly probable. We've got 2 very clean zones. And then to help us to see which one's more likely, we simply do an external retracement. Again, I cover this in my masterclass, which is hopefully, I'm hoping it will be ready within this next 7 days. And then I'll put it in the link once it's ready. So let's see, it's going to be these 2 ones, 1.272 and 1.618. Again, look at that. We've got these 3 clusters in each of these zones. But that's not enough information for us. You can use 2 more pieces of information. I'm gonna be honest, this part's not in my masterclass. I didn't put time analysis in the masterclass because I didn't want to fry your brains too much. But time analysis is powerful because a typical correction takes 50% of the previous wave. Minimum is 38. So we want to be aware of that. That's valuable information, by the way, very valuable information to say a typical minimum is in this zone. And if that zone is not met, it probably means the correction is not over. That is really, really valuable. And lastly, we want to just take momentum into account. We want to get a momentum indicator that pegs these highs and lows. This one's a bit choppy, so I want to go to a higher one. Let's just see how the 13, actually 21 might be better. These are just different settings. But what I'm looking for is something that gets these highs and these lows, this high and the low. So the next bullish reversal on this one, where the blue line goes over the red, combined with a price zone, which we're in one of them at the moment, combined with a time zone, should give us high probability that we've reached the wave 2 low. So now let's just unfold the data. Let's just zoom in a bit. Let's get rid of these red lines, these red arrows. We can put in, because it helps, this ABC, A, B, and we're anticipating a wave C, and we should anticipate in this zone here at least, right? And what we're going to look at, let's just see how it unfolds. So it goes up, bum, bum, bum. Now we're in that zone. To be honest, when I first did the video, I was anticipating this might be the low because it's gone below this low. It's in this zone. But to be honest, now in hindsight, it didn't reach the minimum time zone. So it gives it a higher probability if it reaches this minimum time zone. And what ended up occurring was we ended up getting another low here. Boom. And what we can do here, this is really clever and high level, right? Is this actually looks like it's breaking down to some type of 1, 2, 3, 4, 5. And this part's not that clear, but this part's really clear that this is a wave 3, looks like a wave 4. We've made a new low. So what we did before, we can actually do here also. We can measure this to here, and the typical zones that we should anticipate this ending is 62% to 100%. And 100% is that extreme part, 62% is there. So what this tells me is it's likely that these are not as significant, these ones now, or these zones. So we've got 2 zones. We've got this zone down here, and we've got this zone down up here. So then it comes to trade strategy. Like, how do you trade this? Like, what do you do? Well, you can do a few things. Now because we're coming towards a really precise price and time zone with pattern, with even a 1, 2, 3, 4, 5 wave pattern, there's a couple of other things we can also do. We want a bit more of a tighter indicator. So this was like a broad indicator that gets the massive moves. But if we jump down into a 13, we can see how is it catching these ones. Yeah. So now on the 13, we say on the next bullish reversal, which means the blue line goes over the red, we can either go long, as in buy on a 1 bar high, or a swing high. So let's just go to a bar chart, candles. Let's just choose a swing, and let's just say this one here. This will be quite relatively aggressive entry point, and this will be a bit more conservative entry point. And the way just let the market do is it's gone bullish, bang. That would have entered us down here. And if that was the case, and by the way, look how it's tagged this area very, very nicely. So we can now just even get rid of these ones here. Get rid of this. Get rid of this. This one. Let's get rid of this. And get rid of this pink box as well. So the significant one was down here in this zone. This would have entered us. Now we say, okay, we've got confidence that this is a wave C of a wave 2. And we shouldn't get the price to go below this point here, right? That should hold. That's our hypothesis, so to speak. That's our opinion of the market. And then we should go on to see higher highs being made. Let's just see. Now we know how the market unfolded, right? We know how the market unfolded. Bang, bang, and it just exploded, right? And this is where Cardano is today. And this would have been a brilliant trade, especially if you managed to get in at around $1, and currently it's around $2, it's around 2x up. If you use leverage, in the UK you can't do derivatives anymore. Well, technically you can't do derivatives no more. But Let's now just look at the next part. Let's just get the market up to date. This is the up-to-date data now of the market. Let's go back to our line chart and let's wrap up. So I just wanted to kind of give you these broad lessons. Masterclass is coming, but this is, it's just unfolding textbook style. And people think it's impossible to buy low and sell high. It's not the case. So what's likely to occur next? Well, everything that moves up tends to come down. So we should anticipate some type of correction. Let's just look at the weekly momentum right now. It's severely overbought. So the immediate upside should be limited. And then the daily, again, is bearish. So we should anticipate on a shorter time frame some type of correction, at least 50% at some point soon, and then a continuation. But now let's just wrap up with what should we anticipate for Cardano in the next few weeks and months, right? What's the price action? So let's have a look at this. So if it's okay, I want to just now delete this stuff here. We can delete this. This is no longer relevant. This is out of date. Now, technically speaking, we're quite confident now that this is a wave too low because we've smashed past this high, right? Doesn't mean it is. Well, the final confirmation is we want a break and close above this high, right? So let's just be patient. Let's leave that question mark there because anything can happen, but it's likely. Taking the fundamentals into account, but even purely technicals and psychology of the market, we can be quite confident that the probability is in our favor that the market should continue to the upside. So let's wrap up on what is the typical price projection for a wave 3 high. We measure the wave 1 and we project it forward from this wave 2 low. I'm going to show you what I've done here. Because it's important. Sometimes it just looks like we're drawing random lines, and we're not. We're measuring the psychology of the markets, and each wave has a relationship to the next wave. We just measured this wave 1, the price distance, and projected it forward from this wave 2 low. This is what this 100% red line represents. But the key numbers for a wave 3 isn't the 100%. There's actually the 1.618 and the 2.618. They're the typical price zones. So we can be pretty confident that there's a high probability chance that Cardano reaches either this zone or even breaks past it and reaches this zone up here. And how do we get these numbers? Well, literally what we've done is we've taken 100% of wave 1 and then another 62% of wave 1, which is 62% of this, roughly this distance, and added it on top. And that's what this line is. And then 2.618 is basically another 100% of wave 1 added on top, right? And that's what the lines are. That's what the lines are. But these are really significant. 1.618, the golden mean, the golden ratio, it shows in nature, but it also has been shown to apply to psychology, mass psychology, which is what we're measuring when it comes to the markets. But we're not so interested in this one. We are more interested in the other two. And let's just now finish up with an external retracement so we can narrow things down. We'll finish in a bit of time and then I'll let you get on with your day. So let's have a look at, is the external retracement is 1.618 and 2.618. So these are the normal zones. So this one's probably not going to be that significant. This is going to be the significant zone, right? Very, very significant. And this over here will be an overextension. There's another one, which I don't normally talk about, something called a price expansion. I'm just curious to see what zones would be reached if we do a price expansion. Interesting. Yeah, I was just checking that out just for my own entertainment. Just wanted to see that. All right, so we're going to do is a bit of time analysis. Again, this part's not covered in my masterclass. Because I just wanted to focus on Elliot wave price and Fibonacci price because that is really, really valuable information. And most people have no idea about it, no idea. So let's just measure. We gotta make a decision between here and here. It's not gonna make that much of a difference. But what we want to do is get an indication of what's the minimum time it should take to complete this wave 3. And typical minimum is 100% of wave 1. And we've projected that forward. I'll show you in a second. And we're also going to measure typical wave 1 low to the end of a wave 2 and project that forward also. We're at the 100%. Yeah, that's great. And then we're going to have these two lines. Yeah, you see these two lines? So again, I'm just going to quickly show you what I've done here. Measured here to here in terms of time. Projected it forward from there. And that's this first line. And then I've measured, again, the same point, but to the end of wave 2. And then projected it forward from wave 2. And these are the two lines. Yeah, that's the time zone. There is some more advanced time analysis that we can do, but for today we're going to keep it nice and simple. We've got this zone here. This is going to be the most focused zone, and then if the price overextends, we want to be aware of this price zone as well. So where is Cardano likely to be hit? I'm going to zoom into this one because sometimes I know you're watching this on your phone and sometimes it's not that clear to see. Let me just do it this way so we can see the whole price action as well. We get a nice screenshot. If you're taking a screenshot, you can save this. Hopefully it'll be helpful for you. So the wave 3 zone that we should be aware of is $4.60, $4.60, so just under $5 thereabouts. That's the first obvious zone. And the two dates are, minimum should be 12th of December. So I allow for that time. Where are we now? We're August. So October, November, December, 3-4 months. And then the maximum, typical maximum is 14th of February. So that's a lot of time, right? So it's letting Cardano explode, but I think it's going to do really well. It might get there sooner, but that's just what we're looking at. Let me just try this new, it's not a new feature, but a feature on this. I think it's, where is it? Is it this one here? Oh, this one here, zoom. I'm going to zoom in. So zoom in, I want to zoom in to this price. Let me zoom into this price. Let me zoom in more. So you can have a nice screenshot of the price action. Oh. I think I promised one of you that we'll do this. I don't know if it zooms in anymore. Okay, that's the most it zooms in. Is that right? All right, that's the most it zooms in. Yeah, so it's $4.63. That's the price zone. Allow enough time until December, and there you have it. Cardano, powerhouse, but today it was like a mini masterclass in itself. I've got the official masterclass coming soon. It's going to be free. I want you to be able to do this for yourself so you can analyze your own tokens, because you're probably going to have 10, 20 that you're looking at. You want to be able to do that live, because I can't get these videos out on the same day. We have a whole editing process, and sometimes it is what it is. But let me know what you found most useful. Is it Elliott waves or is it Fibonacci price? Elliott wave, which is the pattern recognition, so you can recognize the pattern of the psychology happening, and then the science of Fibonacci price, how to measure wave relationships with wave relationships. And actually the two do go in hand, and they're powerful together. So today we did a lot. Like, subscribe, hit the bell notification. I'm here to serve you. Remember, it's all probabilities, no certainties. No certainties, just probabilities. And if you act with consistency, you have the edge. Having the edge means you're going to win. Let's finish off with a quote from my book. Let's pick a random chapter. Let's go for chapter 2. Let's have a look. What is chapter 2? Chapter 2, understand money. Warren Buffett. I've said this one before, but I'm going to say it again because it's so important. Rule number 1, Warren Buffett says, never lose money. Rule number 2, never forget. Rule number 1. Rule number 1, never lose money. Rule number 2, never forget. Rule number 1. Now, it's important. You're going to take some losses. You're going to take some drawdowns. That's part of the game of investing. You cannot win every single time. Yes, we play to win, but you have to be okay with losing. But that's why we have risk management strategies. You know, take profits at certain points, take your money off the table, put the money back in your pocket. Now you're risk free, and then you got a good chunk of change in the position. So if it does outbreak like this with Cardano, you can ride the longer wave. If it does get to $5, it's currently $2.12. You can ride that wave and do incredibly well. Like, subscribe, hit the bell notification. I'll see you soon.